Hi there, good morning. You've tuned into ET now, and this is bnsn now with Michelle D'Souza. Along with me today, I have Somit Sarkar. A very good morning to you, Somit. And if you look at the markets, pretty subdued trading session, isn't it?
Well, yes, it was in green for some bit of time, but then again it has slipped back into the red.
Yes, absolutely. It is in the negative territory right now, and the biggest loser, needless to say, one of them has to be Kotak Mahindra Bank. Given what actually RBI has done, we will get you more details on that, exactly what move has RBI taken and what sort of impact the stock is seeing. You can see it on the screen, 10% downtake, and what the brokerages are saying. We'll get you all of that in a short while from now. But let's take a look at the other end of the market. Despite the fall in Kotak Mahindra Bank, you have Nifty Bank that is just trading flat with a negative bias. As of now, take a look at LTI Mindtree, which is reacting to his number. Tata Consumer, once again, it is down and out in trade today. Remember, Tata Consumer was under pressure on back of his earnings, and yesterday also the stock saw a sharp knock. Today also down about 2%. You have HUL that is reacting to its numbers, another 2% there. Bajaj Finance is subdued in trade today. You have the earnings coming out today. Also, you have Maruti Suzuki that's under pressure. But on the flip side, Axis Bank reacting to good set of numbers. As of now, and also a short while ago, you got the news that the board has approved the reappointment of Amitabh Chaudhary as the MD and CEO of the bank. So, if Axis Bank, that's higher by about 5%, SBI, UPL, Sun Pharma, HCL Tech are the other set of gainers. The advanced decline ratio as of now is neck to neck. So, if you look at the advanced decline ratio, it is 1:1. And talking about the sectoral indices is the PSU Bank Index, that is the top sectoral gainer. So that's the way how the markets are looking like at this point in time, Somit. But yes, a lot of individual stocks to discuss, and definitely you have to put the spotlight on Kotak Mahindra Bank, isn't it?
Well, yes, Kotak Mahindra Bank remains in focus. It's down around 10% and that's because of a setback coming in for the bank as the RBI has banned the private lender from onboarding fresh customers through its online platform. Now, the central bank has also ordered Kotak Mahindra Bank to stop issuing fresh credit cards. Gaurav is joining us to give us more details on how will the same impact the bank.
Well, yes, RBI has taken some strict actions against Kotak Mahindra Bank is what we can say actually. They have now asked bank to ban from, they have actually banned the bank from onboarding new customers through their online channel, and at the same time they have also banned the bank from issuing new credit cards. Now, this move was actually taken because of the continued failure on the part of Kotak Mahindra Bank to address the IT issues that the RBI has been highlighting. Recently, RBI also highlighted the issue that the bank customers faced on 15th April, and at the same time, bank can actually provide the services to the existing customer as per RBI's numbers and the RBI's guidelines. But let's look at the numbers of Kotak Mahindra Bank. So, for example, in credit card terms, the Kotak Mahindra has shown a growth of 21% on a YY basis. A credit card book has actually grown almost by 33% CAGR post-COVID, and after that, we have seen that 4% of the book now constitutes by credit card. Apart from that, if you look at digital lending now, 25% CAGR growth is what the bank has shown in the digital lending in the last 5 years. 80 to 99% of the new personal loans, credit card business and lending is coming from this digital channels. And if you look at unsecured portfolio also, now almost 20% CAGR is what the bank has shown in this segment also. And now this unsecured book stands at 12% of the bank's total book versus what it was at 7% in FY22. Apart from that, if you also look at some facts given by Macquarie, majority of the unsecured lending, so for example 9.2% of the mix which comes for unsecured lending actually came from digital sources, and at the same time this segment has grown 40% versus what we have seen the normal segment growing at 18% for the bank. So this is actually a very big chunk of banks incremental earnings that was coming from digital and credit card segment. So definitely the bank was going to get a hit after this RBI's ban. And as we see that, the stock is also down almost 10% in the days today.
Actually, Gaurav, in fact, a short while ago, we also got from a source-based information where Kotak Mahindra Bank MD and CEO has written to employees saying that they will continue to onboard customers via the non-digital channels. They're saying onboarding across all products other than credit card will continue. They're also saying they're trying to resolve the issues raised by RBI, and they have been investing in resilience of the tech platforms. This is what Kotak Mahindra Bank MD and CEO has actually written to the employees. This is what we've got from the source-based information. But Gaurav, you have a lot of brokerages that have come up with the view, and what are they saying? Are they expecting this sort of a hit to linger on for a bit?
Well, yes. If we look at the brokerages also now, they are being pessimistic about Kotak Mahindra Bank as well. So, for example, talking about IFL, they see the impact to be on twofold. So, first would be a slowdown in net interest margins and unsecured books. I mean, there would be higher pressure in net interest margin compression versus its peers, and at the same time, we may see slowdown in the unsecured book, which we saw that increased by 44% in 3Q FY24. If you look at Jeffries, they have actually highlighted that HDFC Bank also faced the same issue some time ago in somewhere in 2020 or 2021, and at that time it took 9 to 15 months for HDFC Bank to come out of this issue. And they also believe that for Kotak Mahindra Bank, if this takes more than 6 months, this will actually impact the revenues and cost for Kotak Mahindra Bank. Let's now look at what Investec thinks about it, because they are being a little bullish on Kotak Mahindra Bank. They believe that there would be marginal impact on earnings, and the exposure of the credit card can go down to 3.3% versus what we have seen at around 4% level in the current days. And at the same time, they also believe that the ROA could go down almost by 2.4 bips because of this, and we may also see efficient EPS dilution of around 1% by FY26. Nomura also holds the same kind of pessimistic view on this. They believe that the restrictions can actually impact the Kotak Mahindra Bank's view of growing their unsecured lending by mid-teen percentage that the bank was actually focusing on, and at the same time this will actually also create a reputational risk for the bank. Lastly, let's also look at what Macquarie has to say, because they believe that the digital onboarding was actually a big thing from Kotak Mahindra Bank, and this can actually impact the bank in the medium term. They believe that HDFC's multiple, when the issue has happened in HDFC Bank, was deteriorated from 3.5 times the price to book value to 2.8 times price to book value, and they're expecting the same impact coming up in Kotak Mahindra Bank also. Although none of the brokerages have actually cut the target price except Jeffries, who has actually cut the target price to 1970 rupees for Kotak Mahindra Bank. We are seeing a pessimistic view coming up from brokerages also. So definitely watching out if any kind of commentary coming up from the management which can actually help the stock price revive in the state today.
Right. All right. Thank you so much for that, Gaurav. And hopefully we will hear out some more on this particular front. You have that flashes or other graphics on the screen where Kotak Mahindra Bank MD and CEO has written to employees saying and reassuring that they will continue to onboard customers via the non-digital route. But let's ask our experts whether they concur with the view of the brokerages when it comes to Kotak Mahindra Bank. Let's bring on board Kush Bohra for our technical analysis, while we have Vivek Karwa joining us on fundamentals. A very good morning to you, Kush, as well as Vivek. Thank you so much for joining us. And Kush, let me come, or rather Vivek, let me come first to you, because given the fact that you had Gaurav outline what the brokerages have to say, they're saying that there could be a likely hit till the time they're not able to actually come out with the response to RBI on that particular front. But let's talk about Kotak Mahindra Bank as a stock as well. It has not performed that great over the last 1 to 2 years either, and now with this news we will see further pressure on the stock. But fundamentally, how much has this impacted the bank?
Good morning, Shiril. Good morning, Kush. First thing first, the image of the bank has got dented. Your colleagues have already stated where all the bank business can get affected. It could get affected in onboarding new clients, on cross-selling. There's so many factors wherein the bank is going to see pain. Now, what is going to happen is the bank has been laggard. The stock has been laggard last almost 3.5 years. It's in same range. And I think it might continue again for next 1.5 years, 2 years. So most of these banks need to learn from the example of Paytm, what had happened. So if you're not going to comply, that's a big problem you're inviting. Now, when it comes to RBI, coming back to normalcy might take you at least a year. So that is one big factor which most of these private banks need to see. And when I talk about denting of image, see what happens is when we have to deposit or say bank go and open an account in a bank, we always see the reputation of the bank as well. So the comfort with which people go to HDFC or SBI, and that image again of Kotak has got dented. So that discomfort is going to continue. I think stock will be a laggard. Yeah, for being a Kotak bank, it might come out of these problems, but I feel at least next 12 months, the stock is not going to come.
And Kush, how does Kotak Mahindra Bank look to you on charts? Is it still no buy for Kotak Mahindra Bank?
Sure. Hi, Somit. Hi, Shil. Hi, Vivek. Well, typically I'd be tempted and I'd be inclined to say that, these kind of news flows, when they come about, they turn out to be a buying opportunity for the stock from a, medium term perspective, at least, sometimes even a near term perspective. But that's the case for a stock which is either consolidating with a positive bias or is in an uptrend and then sees a crackdown. Now, if your team can bring up the chart for Kotak Mahindra Bank, let's say for the last, 2, 3 years, maybe a little more as well, what you'll find is that the stock has actually made a high somewhere close to October of 21. And from there, the stock's just been, giving way. It's just been seeing selling pressure at higher levels. 1600, 1625 is a zone where the stock has taken support in the past and, rebounded from there. So there is a possibility that, it might halt here for some time. But, will it rebound? I'm not sure. And given the kind of momentum that we've seen on the downside, if this level is taken out, I'm afraid, the stock could see lower levels to come also. So at the moment, my suggestion would be to avoid any kind of fresh buying, on the impulse that, perhaps a big crack in a big name is an opportunity to buy. Maybe once the fall settles, it just might turn out to be, a near term play. But for now, my suggestion would be to wait and watch. A very critical level to watch is 1600 to 1625 zone. If that is taken out, then perhaps, the stock could see lower levels in the coming months.
All right, so wait before actually going ahead and buying this particular count is the word coming in from Kush as well. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. More stocks to discuss on the other side, and take your queries as well, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that'll be flashing on the top of your screen, or rather there in the side of the screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. And if you already purchased the stock, mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. Talking about our experts, today on the technicals, we have Kush Bohra, while on the fundamentals, we have Vivek Karwa joining us on the show. And let's get started with all the queries pouring in. And this one is for you, Vivek. Coming in from Vishwanathan Nair, who's writing to us from Cochin, and he's been writing to us daily, and we've not been able to take his query. Apologies for that, Mr. Vishwanathan. And he wants to know whether it's a good idea to enter Wipro and Zydus Life right now for the longer term, and also in case if you can shed some light on Swan Energy as well.
Okay, so see, Wipro, after this rally, I'm a bit, I'll stay away from the stock as of now. Particularly because you've already seen the results of other big companies in same sector, and the margins are improving. In fact, the profit is increasing hardly by single-digit numbers. There is one problem. They have attrition issues, and the recruitment also is not on full go. So there is some stress in the sector, particularly the programming and software services. So it would be avoided at these prices. Yeah, if it again goes to 420, 400 levels, that time we can look at the stock. So 460 would be avoided. When it comes to Swan Energy, see, the stock did really well. It's a momentum stock. You got to be very, very clear about it. It's I'm not sure it is going to be an investment stock, but it is surely a momentum stock. It went very fast, fell down, again recovered, particularly on news that it bought the Pipavav. After that, it has been renamed as Reliance Naval, and through NCLT. And Reliance Naval also is going to get listed pretty soon. So there might be some kind of value unlocking in Swan, which might happen. And that's the reason stock is doing well. But after the rally, I think once the listing happens, it might go up more. So don't make too much of fresh entry, small quantities.
Okay. Well, the next query is coming in from Neelam from Jaipur. Now, this is, I guess, the query of every investor who has invested in Vodafone Idea's FPO. Now, she has been allotted a large quantity of Vodafone Idea shares at an FPO price of around 11 rupees. She's asking for profit booking strategy for this 6 months with levels. So, Kush, any levels that you could give for Vodafone Idea?
Well, it's not a bad idea to book some profits here. It's still a neat profit considering the allotment price. However, 14 to 14 and a half is a strong resistance band. If and when that does get taken out, then the stock could head to 16 and higher levels also. But let's understand one thing, that this is an extremely overcrowded trade. Time and again, the news flow uh, has been rather mixed when it comes to Vodafone Idea. So my suggestion would be to at least book partially around these levels and then wait for some time. If 6 months is the horizon, then perhaps one more shot in the arm, and the stock could perhaps head to 16 levels also. A stop loss here very clearly comes at 12.5. So book partially here, hold the rest with a stop loss of 12.5.
All right, this one's coming from Subrata Ghosh and wants to know about Fino Payments. Kush, 500 shares at a price of 300 rupees per share. Subrata wants to know what's the future coming in for Fino Payments and should buy more or hold?
Well, the momentum's missing. There is a very clear base formation, in place at the 285 kind of a support zone. So that would immediately be my stop loss. I wouldn't suggest adding more, only for the reason that the momentum's not there yet. The stock's not too far away from his buying price. 305 also incidentally happens to be the 200-day moving average. So I'd wait, on this one. There is some build-up, that is in place. Once 305 is taken out, then the stock could, zoom up till 325. So my suggestion, put a stop loss of 285 and hold on. The momentum may be missing, but there is a base formation in place, and then the stock could perhaps, at least from a trading perspective, see a higher level of 325 in the coming weeks.
The next query is from Krishna from Bangalore, and he's a senior citizen. He has around 200 shares of JK Paper, bought at a price of 370, and NLC India as well, bought at a price of 232. He's holding these stocks for the last 3 months. He wants to know about fundamental and technical views. So firstly, Kush, what would be your technical view on JK Paper and NLC India?
I'm just smiling because I know what Vivek is perhaps going to say the moment you mention senior citizen. But that said, JK Paper is seeing a revival. Today is the first day after a good 2 month hiatus that the stock is crossing the 200-day moving average. Perhaps there is some more upside on this one, so you could wait out. 390 is my first target. Once that is taken out, perhaps 410 also on the card. But have a stop loss at the 365 zone. It's a strong support zone. If that gets taken out again, then perhaps exit. NLC India, we are fairly bullish on this stock. Time and again, we've recommended this as a part of our advisory service as well, and thankfully we've got a lot of our targets set on this one. Right now, it's consolidating, but we do see a lot of upside on this. I think the buying price is perhaps a little higher, if I'm not mistaken. But I think if the investor can hold it with some patience, I think the stock will see better days ahead. For now, the positional stop loss here is at 200, and on the upside, the levels that we're looking at are 270 and 295.
And Vivek, what would be your fundamental view on both these stocks, JK Paper and NLC India?
So I would not go in those territory which Kush was telling. First of all, even I am bullish on NLC India. See, if you really want to buy good quality power generating stock and also renewable energy. So NLC India is a great company if you really got to go. And this is, again, belongs to Tamil Nadu where I live in. So Neyveli Lignite, I have seen the plant, I've gone there. In fact, I've given lectures there to the employees. Great company, valuation wise also very good. Long term, I am very bullish on power, and I think you should continue holding it on. Again, whatever long term I want to hold it for. Second stock was, sorry, I lost it.
JK
Which
Paper.
was the second one?
JK Paper.
See, JK Paper, after this Israel and Iran thing, in fact, most of the paper companies have increased prices. This is what I hear, because I have a lot of friends who do say deal in paper, and that to wholesale. So there are issues. There is less supply of paper, and that's the reason the stock should continue doing well. So valuation wise, also JK Paper looks quite, I say between 5-6 P. Good company, good brand, and the international tensions again will keep the paper prices high. So continue holding both the stocks.
All right, so that's the take coming in on NLC India as well as JK Paper. But Vivek, coming back to you, because this one is coming from Suresh, who's writing to us from Chennai. And he wants to know about India Glycols as well as Transformers and Rectifiers. He wants to know whether he can consider investing at current prices. Transformers and Rectifiers in particular saw a sharp rally after its earnings. And now actually it's taken it a bit easy over the last 2 to 3 trading sessions. What's your take? Now is the right time to enter in this counter as well as in India Glycols on fundamentals?
See, when I say I'm bullish on power, it doesn't mean that I become bullish blindly on all the stocks. So when I compare NLC and again transformers and rectifiers, of course the power distribution business is going to be good going forward. But the valuation wise, I used to see this stock in double digits. Now today it's 660 levels, which looks quite richly valued. Whatever is the result, the stock looks quite pricey to me. So you got to be a bit careful because any negative news and the stock can correct considerably 20-30%. So the if it keeps going up, I think you should slowly and steadily book profit. And there are so many other power stocks which have limited downside and good upside. So you should continue holding Transformers India with upside profit booking. And the other stock was
India Glycols. The other stock was India
see
Glycols.
India Glycol. I think you should hold it on. It's a great company again, and say not identified by market as yet. Now, company also is into liquor space. They do have, say, IMFL business, which again, market is not noticing. Even the valuation wise, compared to all bigger companies or even smaller companies like Tilak Nagar or Som Industries, you will find this company has better management, better business, and better brand. But the valuation are actually probably half of those companies. So continue holding it. The day it starts moving, it will straight away go to 1,200. When will it go? I cannot say that, but yeah, stock should be at 1,200 sometime.
Well, thank you, Vivek, for addressing that query. With that, let's slip into a short break and post that will address more viewer queries. So stay tuned and keep watching TV.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries then, viewers. And this one is coming in from Jay Krishnan. And he wants to know about an entry level coming in for Bajaj Auto as well as Tejas Networks for the medium term. Earlier this week, we did speak about Tejas Networks, actually, Kush, in depth, given the fact that the stock saw a spectacular rally post its earnings. But what's the right entry level coming in now for Bajaj Auto as well as Tejas Networks?
Both these stocks are in an uptrend. The only difference is that the uptrend for Bajaj has been rather steady, and I mean that only in a relative basis compared to Tejas, which just had a a shot in the arm for the for 2 sessions and just moved up drastically. So that said, there is a mild profit booking in both of them. So not a bad idea to perhaps make a part entry right now and then wait for slightly lower levels on both of them. That will be my strategy. So not a bad idea to start entering both these stocks at the current price. But if you want to add a substantial chunk, then for Bajaj Auto, perhaps 8,500, 8,550 is a good level to make a rather sizable investment. And for Tejas, I think that number comes to about 1,000 to 975, that zone. For both these stocks, buy on dips is still a prudent strategy that I would go with. So 975 to 1,000 for Bajaj Auto, and about 8,500, 8,450 for Bajaj Auto.
All right, let's move on then. Let's take another query. This one is coming in from Raghavendra, who's writing to us from Chennai. He purchased Kotak Mahindra Bank at 1,900 rupees per share. Kush, he wants to know if it's the right time to average the stock at this price. What's your take coming in? It's your favorite question, no? A favorite query for you. Every time everyone sees Kush wants to ask whether they should average or no. But Kotak Mahindra Bank, given the fact a sharp knock, we did speak in depth about this particular stock right at the start of the show, viewers. So in case you've missed that, maybe you can catch that episode on YouTube when it'll be posted. But Kush, you are of the view that you should wait it out and not go ahead and buy the counter right now. Now, for averaging out, what's your sort of a strategy?
If it is easier for your team to perhaps play some of my past recordings whenever someone asks an averaging question, perhaps you can throw it at them on the WhatsApp itself. But my view still remains.
I think I can repeat that statement for you, Kush, where I can give a caveat to all of our viewers that Kush is not in favor of averaging. That is one strategy, I think, where he has a big avoid stamp written all over, isn't it?
Absolutely, except for one case when the stock is indeed confirmed a rebound and moving higher. That's the only scenario. Otherwise, it's just more, it's just more an ego-driven investment rather than a financially sound one. So that's the view that I still maintain on that averaging strategy. On Kotak specifically, since we had the discussion at the start of the show, that even now I'm not convinced whether this fall is actually done and dusted. 1,600, 1,625 is a strong support zone. It's a multi-year support zone. for the stock, and tested that once today, but managed to hold on. Not sure entirely if it will be able to hold on to this for the coming weeks. So for now, wait and watch. If indeed 1600 is held on a closing basis for a couple of sessions, then perhaps you might consider this as a short-term trade also for a rebound. But at the moment, I would say wait and watch. Don't average just yet. If there is a fresh if there is a fresh indication of a rebound for a near-term trade, then perhaps we'll circle back again, but not at the moment.
All right, that's the take coming in on Kotak Mahindra Bank and also the entire averaging strategy. Vivek, coming to you, this one's from Tapasya, who's a long-term investor, writing to us from Mumbai, and she has 30 shares of Dalmia Bharat at a price of 2,021 rupees per share. She wants to know whether she should stay put with it or look to exit, and also if you could shed some light on South-based cement companies in particular. Dalmia Bharat, one of the reasons why that reaction you're seeing also today is because of its earnings, isn't it?
So seeing the stock go many times to 2,400 levels and then coming back to 1,800 itself is a big tapasya. So what you should do is see, overall the stock looks good, and whatever results, I think this should continue, and again it should test 2,200 2,400 levels again, probably after elections and once the infrastructure policy of the government is in place again. Now, if you look at South-based cement companies, the only major player over here is India Cements. And that stock also looks costly to me at these levels. And once Mr. Srinivasan is not there, I am not sure how the company is going to do. So overall, cement space, I'm bullish, but it would be sell on rise for Dalmia and also sell on rise for India Cements, which is South-based, in fact, Chennai-based.
All right, moving on to the next query, and Kush, this query is coming in from a viewer named Vivek itself, and he's holding 1,200 shares of Tata Consumers. He wants a technical view for the next 6 to 12 months, and what are the support levels that are coming in for Tata Consumers now?
Sure, Srishti. Well, this was one stock that, we were a little bullish on in this space, along with, let's say, a Colgate Palmolive. Otherwise, most of these stocks haven't really done anything for a while for investors now. Now, at the moment, the stock is actually very close to the support zone of 1080. This too is a multi-week support zone. So I will wait and watch, if this support zone is held. Otherwise, I think the cut could be a little deeper, perhaps even to 1,000, 1,020 levels. So right now the stock is placed at the support zone of 1,080. Wait and watch. If this is held, and there is a probability that this might be held, all the result impact might perhaps get played out, and perhaps it will resume its uptrends. There is a possibility that we are betting on. From a near-term perspective, I'm looking at 1,050, and once that is taken out, perhaps even 1,225 kind of a level also in the coming weeks and months for this stock.
All right, this one is coming in from Fred, and he has a couple of stocks in his portfolio. One is Arihant Capital, which he has at a purchase price of 69, BF Utilities at 835, and Share India Securities at a price of 1,626. Out of the counters that you actually track in this, Vivek, how do they look for medium to long-term horizon?
See, if you really want to buy any of this, I would go with BF Utilities. I would avoid Arihant or even Share India, particularly because of reason that they again are players in capital markets.
Vivek, so now the thing is, he already has these counters in his portfolio. So now what should he do?
Okay, then I would even ask them to book profits, because see, what happens is you are in capital markets. Now, for example, I'm an advisor, I'm a stockbroker, everything. Now, my fortune also is dependent on how the capital markets do. Right. So instead of me investing in other businesses, if I start buying all this kind of shares, then there's nothing called diversification. I'm not doing any kind of diversification, and that could be a dangerous situation. That's the reason I'm saying you should buy various businesses instead of companies focused on capital markets. First thing. Second thing, BF Utilities looks very good to me. I think valuation-wise also that comfort still remains. And moreover, the discount it still has as a holding company, and it holds stocks of Bharat Forge and other say sister groups. So stock even looks cheaper even now. And in fact, there is one more stock which I'm holding it personally, and you can look at that also. That is called BF Investment. So both BF Utilities and BF Investment would be a buy from me. Other two would be book profit.
All right, so Vivek also shared one of his top recommendations as well. But with this, it's time to slip into a very short break. Don't go anywhere, viewers. We'll be right back to take more of his stock related queries. Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. And continuing the same, the next query, Vivek, that I have is coming from KV Reddy from Bangalore. He has purchased 400 shares of JM Financials at a price of 101 rupees. We are aware that about all the news flow related to JM Financials, and Mr. Reddy is also at loss. What to do in this one? Would you still advise to continue to hold on, and any targets as well?
See, again, there was news recently that there were restrictions and regulatory action on JM Financial as well, right? The group is trying hard. In fact, I went for their say management meet also. The group is trying hard really to expand the businesses, because JM Financial was almost for 20 years sleeping silently, and now Mr. Junior Company, after he having taken charge, is trying to revive the company. But the recent regulatory action again will continue making this stock remain as a laggard. So don't buy now. Yeah, we do a lot of business with JM Mutual Fund, which is doing very, very good. I think if you really want to invest in JM Mutual Fund schemes and not in the stock as of now. So maybe future, once things improve, that time we can again talk again. But right now it will be avoided.
All right, this one is coming from Shivanshu, who's writing to us from Delhi, and this one is specifically for you, Kush. He's saying that he's been trying to capture MCX on intraday basis. He gave up and he bought it on equity. He wants to understand from you, Kush, how to capture volatility in large cap, which generates quite a movement. And apart from that, he wants your view on ACE.
Well, I think the first question perhaps is a longish learning session. But you could just a quick word. You can switch to lower time frames and also track the kind of movements and the averages. That is broadly how we go about catching intraday movements. But also, let me tell him one thing, that it is like predicting every delivery in a T20 or a test match. While you can broadly predict where the match will go, it's a little difficult to predict how every delivery will result. So it's perhaps the toughest thing in the game. So kudos and all marks to him for trying, but then don't be too hard on yourself. Now, as far as the stock itself goes, well, we've been seeing some sort of a resistance at, those 4,000, 4,030 kind of levels, on this stock. But there's a possibility that, it might break through. What is a considerably, good fact about the stock is that even in a paused market or in a relatively weakish market, the stock continues to gain ground. So for me, this is from, let's say, a positional perspective, it's a very good buy. I wouldn't rule out a move until 4,200 and 4,350 also, if he's got the patience and he can hold on to this for a few months. A stop loss comes in at 3,850.
And what about ACE, Action Construction?
Sure. So broadly, this space has been doing well. ACE also is one of the picks in this space. I think, this dip that has come about was the buying opportunity. Even now, the stock is slightly off its highs. So even now, I think there is an opportunity in the stock to be had. 1625 is a very reasonable target on this, and perhaps a 1700 kind of level also can be seen in this. So very constructive on ACE from a near-term perspective and a medium-term perspective also. Stop loss comes in just below 1500, so perhaps 1490 is a good level if this is a trading bet.
All right, taking the next query, and Vivek, what's your view on MCX? Sundarajan is holding 60 shares at a price of 3,000 rupees. He wants any target price that you are looking out for in the next 1 year, maybe, given the kind of run up that we have already seen in this counter. Would you still advise to continue to hold on, and what will be your advice?
No, I would advise booking profit. Of course, this is the only listed play you have in commodities segment. But the stock has done wonderfully over last, I think within a year, it has almost gone up by 4 times. So booking profit at this levels would be more sensible. And looking at the profit versus the market cap, clear cut, it's highly overpriced now. So, but yeah, technically the stock looks quite strong even now. So what I would suggest is slow and steadily, like SIP manner, keep booking profits. On any dips, yes, that time you can look at it. But right now,
This was coming from Mahesh writing to us from Delhi. Kush, he wants to know about IRCTC. He's purchased 100 shares at a price of 905 rupees per share. He wants to know whether he should hold or exit with a 6-month perspective.
Oh, absolutely hold. The stock has completed, its downturn, attempting a revival, and rather successfully, I might add. Again, here too, there is a very clear relative strength. The good thing is that the stock's fairly above his buying price, so now he can have that strategy of placing a stop loss. 990 would be a good level to place your stop loss. And let's say from a 6-month horizon, there's a very good possibility that the stock could hit 1080 and then 1125 levels also. So IRCTC for me is a very clear hold.
All right, the next query that I have, Kush, is coming in on sale, and Reshma Bhatia is holding 2,000 shares and she's already at a 25% profit in sale. What to do in this one? Would you advise to book out some profits at this point in time, or in the long run she can still hold this counter, and any targets that you are looking on the long-term charts?
From a long-term perspective, Srishti, things look good for sale. However, I think you and I, we've had a discussion time and again over the metal space where, the volatility is, a bit of an issue. Now, if she can handle the volatility in the metal space, then continue to hold on. But, 25% is a neat profit. I don't know the time horizon in which she's made it, but it's still a neat time horizon. It's still a neat profit if it's in, let's say, a year, maybe a little, over that. So not a bad idea to book partially and continue to hold the rest from for a target of 185 and perhaps even 200 levels. So if volatility is not really a concern, then hold on to the remaining quantity, but a good idea to book some profits here.
All right, this one is coming in from Sri Kishore Sharma, who's writing to us from Bihar, and he has BSE 285 shares at a price of 762 rupees per share, CDSL as well at a price of 1,241 rupees per share. He's been holding onto these counters for the last 2 odd years, actually, Vivek. He wants to know for more 3 years, can he stay put with both of these counters, as well as what sort of strategy should he adopt, given the fact that he's making spectacular returns, at least on BSE alone. The way I can see the stock price, buy price is just 762 rupees per share, and the other stock that he's bought is CDSL. Both of them, you can say, go hand in hand, given the fact that we will see a spectacular rise going ahead in markets even for times to come.
See, particularly on case of CDSL, the way Indian markets are going to continue penetrating into the country, particularly Tier 3 and rural segment, I think CDL is a clear-cut winner. Yeah, at these prices, the valuation definitely looks a bit stretched. But if you look at next 5 years, 10 years, I think the capital markets growth in India is going to keep on growing. Now, whatever said and done, CDSL is #1 player today compared to NSDL. That is one thing. And BSE as a stock, again as only listed stock available today. When will NSE come? Last 5 years, I'm hearing that NSE also will come with IPO, but that is not happening. So, and BSE also will keep commanding some kind of valuation. So, continue holding both for next many years. Similar is the case with MCX, because short term, these stocks look stretched, but longer term, they would continue doing well. Now, one more thing in BSE, they are trying to revive the derivatives segment, which is, I think, giving some sort of roots, and there is some volume happening. If that continues, I think the stock will really do well.
All right, that's the take coming in on BSE. But with this, viewers, let's move on to an ET Now exclusive, where we learn from reliable sources that Aditya Birla Group is in advanced stage talks to buy promoter stake in Orient Cement. We are being joined by Priyanka Uppal with more details on this one. Take it away, Priyanka.
Well, yes, what we learned from exclusive sources is that Aditya Birla Group is in advanced talks with Orient Cement to buy the promoter's stake. CK Birla Group, along with some private investment vehicles, hold around 37.9% stake in Orient Cement. So, talking about the current market cap, the deal size could be around 1790 crore. If you talk about how this deal can be rewarding for Aditya Birla Group, talking about the financials of Orient Cement, let's understand first its key areas. They are very active in southern and Maharashtra belt, western belt, but they are also exploring newer markets like Uttar Pradesh, Chhattisgarh, a lot of northern belt. this would be one key area. Secondly, talking about the current capacity, which stands at 8.5 metric ton per annum, their EV to EBITDA basis is seven times nearly. Orient Cement is currently executing a 2,000 crore capex for expansion, and they recently, in fact, transferred some limestone mine leases in Rajasthan also from Orient Paper, that's a group company, to Self. And Rajasthan mines, which have estimated reserves around 40 years. So this is more about Orient Cement, but talking about the cement industry in totality, as we see, there is a lot of consolidation happening in the industry where the smaller cement players are potential merger and acquisition candidates, because a lot of pressure in the kind of acquisition, a lot of targets, the capacity expansion targets which are coming in from the top players, the rising competition. If you talk about Aditya Birla Group's combined cement capacity, which stands to around about 180 metric ton per annum, and in fact the combined capacity happens to be 200 metric ton per annum, 180 metric ton per annum, but they intend to expand it to 200 metric ton per annum. We sent queries to both the groups. It went unanswered, but then this deal seems to be going through, and if this goes through, then Aditya Birla Group will have to make an open offer.
All right, thank you so much for that, Priyanka, for getting us those exclusive details. And the exclusive details that Priyanka has got us is that AB Group is in advanced talks with Orient Cement to acquire promoter stake, and that is what we're picking up from sources at this point in time. But let's bring on board Rakesh Arora to exactly understand what's exactly happening in the cement space. A very good morning to you, Rakesh. Thank you so much for joining us on ET Now. And cement sector has been going through a consolidation of late, and in fact, apart from consolidation, you've seen many big players actually come out and talk also about ramping up their capacities.
Yeah, so meaning we have two big groups who are jostling with each other to grab market share. So Ultratech is the undisputed leader right now, and as you were mentioning about the big capacity they already have and the expansion plans they are, rolling out. Adani's have been, came into fray with acquisition of Ambuja and ACC and have made their intentions very clear that they want to be the number one player. So there's a lot of catch-up that they need to do because their capacity is closer to around 80 odd million ton after the acquisition of Sanghi Industries. And so there's a big gap between them and Ultratech. So it won't be they won't be able to bridge this gap just by doing organic growth. They will have to look for inorganic acquisitions, and so some of the names that you are mentioning, they might be interested.
Right. So that's about what is exactly happening with the cement sector. And like you said, Rakesh, actually two big groups actually trying to get into the market share, given the fact that you have Sanghi, Ambuja as well as ACC under the blanket of the Adani group and also you have Ultratech, you have Grasim, and now if as per sources, Orient Cement also, AB Group is in talks actually with the promoters of Orient Cement. But also you have other small players as well. You have players like India Cements as well. What's the prospect for these smaller counters for you, smaller cement players going ahead? Do you see further or more aggressive consolidation taking place in the cement sector as a whole?
So first of all, on the Orient Cement, Ultratech recently acquired Kesoram, and Orient's plants are not very far from where Kesoram plants are. So one needs to really evaluate whether Ultratech will be able to get the CCI approval and all that. That is number one for Orient. So I doubt if Ultratech alone could be the front runner here. Coming to other smaller companies, India Cement is the largest one, but their plants are not that great, and valuation that India Cement can command will also not be that high. Overall, I would like to point out that probably the deals for cement companies will happen between $80 to $90 per ton of capacity. So investors need to kind of evaluate what they are buying and whether it is really cheap and there's some upside still left or not.
This is Shrishti also joining in. Just wanted an answer on the whole cement industry, because just today we had Dalmia Bharat coming out with the commentary that the price hikes could be a little delayed. So since we are seeing a lot of consolidation, in the sector, with major groups actually acquiring the major part of the industry. But do you believe that the pricing is something that the investors are looking forward to? And what is your expectation that the pricing power will once be back? Because just a couple of days back, we were analyzing that the cement prices are still at 10 decades, are still at the prices which were seen back 10 decades. So no substantial change on the pricing front, but with this consolidation, do you believe that there has to be more legs to the pricing, and what's your expectation on that front?
No. So I don't think it's correct that cement prices are stuck at where they were 10 years ago. Cement prices have increased. It's only off late that we have seen sharp correction in cement prices. And that is reflected in, the first cement company which reported yesterday, Dalmia Bharat. Their margins have dropped by 400 rupees per ton. And this is happening because, both Ultratech and Adani are looking to grab market share. So despite decent demand and being in one of the best seasons for demand, prices have gone down, which is a rarity. It doesn't happen, all the time. So until unless this market share grab, game continues, cement prices is probably going to take a back seat. So that is point one. Number two, I would say that, if you are looking to acquire some companies, it probably makes strategic sense to have low cement prices and put pressure on these guys so they sell out at cheap valuations. So that could also be one of those, possibilities. So overall, I would say that, cement prices would remain a little bit weak in the near term, and cement companies will have to contend with a lower profitability. But investors might look beyond and, they would look at consolidation happening in the industry and pricing power coming back eventually.
All right. Thank you so much, Rakesh, for joining us on the show, actually giving your view on the entire cement space, the consolidation that is happening in this particular domain, as well as the capacity expansion, and also talking about what's exactly happening about the pricing when it comes to the cement sector. With that, actually, we are totally out of time on this edition of Buy Now, Sell Now. Thank you so much, Kush, as well as Vivek, for joining us on the show and actually waiting by very patiently. And apologies to all of our viewers because we could not take your queries in the last leg of the show, but we will be back tomorrow and try and accommodate as many queries as possible. With that, it's a goodbye from Shrishti, myself, and the team that put the show together. Stay tuned. Market Saloon coming up next.
If you like this video, then like, share and subscribe to ET Now.